All right. So if you look at this, I'll go to a monthly first. I'll take all the annotations off. So if you're looking at Eurocad, you can see that I'll flick over to the line chart. You can see that price has clearly been trending up for quite some time. Once we had this bottom established back in 2012, we had a really strong run that came to this peak in February 2014. So this thing has been going for quite some time. So this current expansion here, we were looking back in, somewhere September 2019, we had a high established August 2020, and now we're retracing. So if I go to a weekly and I put back the candles, and I'm going to just put it in replay mode just for a second so you can kind of get an idea of what we're talking about. So if you look at this, and I'm just going to clear the chart. And this is honestly what you should be doing anyway with your pairs. This is what's going to really give you the big picture narrative. And then once you figure this out, it's looking for supporting structure, and then you're working in entries that go in alignment with the big picture, which can give you a daily, weekly directional bias for several weeks, several months, sometimes even longer. So, for example, if you take this retracement here, one of those monthly pullbacks, and once it established a low back in February 2017 and it reached its high up here, that was March 2018. So, that's quite a bit of price action with higher time frame targets, right? You have this obvious high here, this obvious high, and then you're building intraday and weekly, monthly targets in alignment with that. So if you look at this current price action, now that we're familiar with the structure, right, we're doing the same thing. And we're looking for the same patterns. We're looking for the same points of interest. We're using the same fib zones, everything. And I would honestly approach these timeframes just like you would if I said this is a 1 hour chart. A lot of people, they shy away from marking up a chart accurately when they know it's a monthly, weekly. Monthly, weekly, most people are just jumping into more so the current price action, and they're determining that structure. So if I did this, on like a monthly, they might look at this and say, oh, a monthly higher low, monthly higher high, and then price came down here and broke structure, and thinking reversal. Or they'll look at a weekly and they'll say, okay, lower low, lower high, lower low, lower high, lower low, lower high, right? Just looking at this and thinking that this is bearish, when in reality, that's just a higher time frame retracement. And big picture, we're bullish, very bullish. So it's really establishing those points of interest that, one, if you are selling in this, because there will be, when you're looking at higher time frame retracements, there will be selling opportunities. But you have to be aware of your surroundings and know when you should be closing out, or just start pumping the brakes for the shorting and get back in alignment with the big picture. So if I were to quickly mark this up, and remember, I'm approaching this like, hey, this is a 1 hour time frame. What am I looking for? I'm looking for manipulation. I'm looking for structure. I'm looking for impulsive and corrective price action. So if we were looking at this, what is the first thing that is visible here? Let's just do this. Let's just break down Eurocad. Let's just break down Eurocad, because you know what? This is probably the closest thing that we have to a trade of the month that, it's in our point of interest. It's in our higher time frame kill zone. So this is definitely something that we can start monitoring, and once things become available, we can start taking advantage of that for the next several weeks, maybe several months. So let's just do that. Let's start breaking this down. Let me pull the chats back up. So looking at this chart, what do we want to do? What's the first thing we want to mark up here? What are some of the key characteristics that are currently available here that we should be marking up that can help us determine our directional bias? And then we can start getting into lower time frames and start anticipating specific price action that kind of give us the signal that now it's okay to start buying. That is weird. I keep getting really weird texts. We had a bank account that was hacked. I'm sorry, I just got another weird text about a bank account that I don't even have a bank with, and these scammers and hackers are a pain in the butt. So imbalance on a monthly time frame, like that's not something that we're really like, a lot of imbalance that may appear like imbalance on a monthly is probably not in reality. We can find gaps like this, but imbalance is not something that is going to determine our directional bias on higher time frames. That's probably one of the things that I'm not looking for on higher time frames. For me, it's structure. For me, it's manipulation. For me, it's an impulsive and corrective price action, and then targets. And then once I have that, I can build my intraday lower time frame, 4 hour, 1 hour, and lower setups around that big picture. But I need my big picture first. You have to have that long-term view, long-term targets, and then you're building your setups around that. I'm not just pulling up Eurocad and jumping down to this price action and seeing what's available. I'm looking at points of interest where I'm looking for reversal points. I'm looking for continuations and trying to identify, what that big narrative is. What are the big areas that they're looking to run on? So that's what we're looking for. So a lot of people are saying manipulation currently at a break retest level. Yep. So both of those. So the first thing that just really jumps out at me is this, like all of this here, I'm not too concerned with. What I am concerned with, not concerned with, it's probably not the best word. What really has my interest is that, okay. I say this quite frequently when I'm looking at price action, and the main reason I'm looking at structure and trying to identify impulsive and corrective price action, because more often than not, that impulsive price action, there was manipulation that was the catalyst for that move. So if we look at this move here, this is a strong, higher time frame, impulsive continuation move in alignment with the big picture. It's bullish, right? That impulsive price action, more often than not, that's what's going to give you the direction. So if we saw that corrective retracement, more often than not, you're going to see that lower time frame impulsive price action bearish. Higher time frames, we're seeing bullish impulsive price action. Look, bullish impulsive price action, bullish run, creating this gap, bullish impulsive, right? Bullish impulsive, another strong bullish impulsive price action, which created this gap here, and that's where you're usually going to find those gaps and those imbalances in this impulsive price action. So when I see this, now I want to investigate it further. What was the catalyst behind this move? And we can see what took place here. We can see a buildup of liquidity in this area. Mia pointed it out already, right? Mia pointed that out already. If you look here, okay, what do you think most people are doing in a situation like this? If Eurocad looked like this prior to that move, what are most people doing here? She called out this break retest level, maybe something like this, where we have support in this area here. And then if I were to draw something like that and identify that support and I drag that through, this is a classic support and resistance, a break retest level where anything above this price, retail traders are looking for bullish moves. They're using these levels as the initiative for their opportunity and their planning and their directional bias. And when price pushes below these levels, then it's viewed as resistance. They're looking for selling opportunities. And in their eyes, the best places to look for shorts is as close to this resistance as possible, right? Price breaks through, retests, kind of pushes above here, then comes back. Stability in this area, moving sideways, but respecting this area here, bouncing this zone many times before it looks like it's starting to break out. And that's how a lot of retail traders are trading, zone to zone. So if you look here, you can find support, right? And if we were to drag that over, okay, you can see that we have a big support level here and a big resistance level here. So seeing stuff like this, regardless of the time frame, that can really help you with the flow of price and building your directional bias. So what I mean by that is, we know that there's going to be a lot of opinions. A lot of traders trade inside range bound price action. They like to trade zone to zone. So they're looking for a break retest. So what I mean by that is if we have like another break retest level up here, if price were to push through this level like this, right, they'll be looking for this resistance as support, and they'll be looking to target this next area where they'll be looking for profit taking. Same thing with the downside. If price breaks this support level, they're going to be now viewing this as resistance. Same thing that happened here, and look for price to continue perhaps down to the next available level, which might be this here, this support level. So that's how a lot of retail traders are viewing the market and building their directional bias and building their setups, when in reality, the only thing that's really happening here is a buildup of liquidity because of all the opinions that are being formed here. You're gonna, even something like this, depending on a person's belief system and style of trading and risk tolerance, there's going to be a lot of opinions here, and a lot, depending on their strategy too, a lot of that will affect their opinion. So you're going to have buyers and sellers at all times. You're going to have people that are buying this support, and you're going to have people that are buying or selling this resistance. And then this is where a lot of sell stops, a lot of buy stops are set. So you're going to have people that are setting buy stops here to catch that breakout, putting stops, under here, targeting the, and I'm generally speaking that you're going to see this on all time frames, but higher time frames, it's probably the most important, because that's how you're going to accurately build your directional bias and provide you a solid, stable, accurate direction for long periods of time. So seeing stuff like this where we have ranging, regardless if you can identify patterns from a retail perspective, identify areas of liquidity building, ranges, equal highs, equal lows, support, resistance. That's pretty basic there, right? And what we want to do is wait for manipulation. So regardless if that's the top or the bottom, ideally we would want to look for the bottom here, because why? Why would we want to look for the bottom taken here first? Anyone? Why would it make more sense for us to look at the bottom being attacked first and then come up and attack the highs? And I'm referring to this. Why would we want to see this? Like, granted, like if we saw this, or excuse me, if we saw this and then this, right, that would then bring us in to look for opportunity. But why would we want to see something like this? Take the bottom and then the top. Why would we want to see that? A lot of liquidity above, so it takes liquidity first. Yeah, that's part of it. Yeah, Giuseppe said with the trend, that's this here. This wouldn't be in alignment with the big picture. This would. Remember, we're in a higher time frame point of interest already, right? Like if we were to take this swing low to this swing high, okay, we're already in a monthly kill zone right here, 71 to the 886. So selling in higher time frame kill zones, that's not the best place to be looking. That's not the best positioning, right? So it would make more sense if we're going to see price start running on highs, right? This break retest level, this relative equal highs, this high, and start targeting these fib levels up here. We would want to see the bottom taken first. Manipulation, taking out these lows in this kill zone, right? If I go to monthly, let's see if we can take a look. So we don't really have a solid candle here, but right, what is this candle here? What is this? What is this over here? What is this? Yeah, it's manipulation, right? How do we know that? Because Same thing that we were looking at here. Impulsive price action. What was the catalyst for that impulsive price action? We can see, if I flick over to a line chart, we can see price broke a higher low confirmed once we had a higher high, then price pulled back, then started pulling up, right? Retail traders drawing trend lines, whatever it might be, there's liquidity building under these lows, right? And price pushed below all of these lows. And then the proof is what took place after, right? So we can mark this up. And that's why it's important to read the whole story, right? A lot of people would dismiss this price action from 2017 and say, what relevance does that have? And it has everything. You need to understand the whole story. And we can see this area here was the manipulation. And that area of manipulation, those are really the points of interest that you want to be looking at for swing points, right? If I'm looking for this manipulation and this higher high, I am looking at a swing low to a swing high with a swing low that's manipulation that has a very good chance of being respected versus, this swing low here, which wasn't really much. It was a building liquidity. There was no manipulation on this swing point, and that's not one you really want to get behind. You want to get behind swing points that are manipulation. So we don't have a solid candle in this area here, but we can still take that last down candle here. We'll just mark up this one, right, for our monthly point of interest, our down candle before price impulsively, aggressively pushed up, broke structure, which started a run on these highs. Slight retracement here, building some relative equal lows here, pushing up, attacking now these relative equal highs, and then pushing up and running on this high here. You can see it ran up on that high. That's a run on liquidity, okay? So when we're looking at, a buildup of liquidity, we really want to see that manipulation in alignment with the big picture in these kill zones. So we would want to see this. We wouldn't want to see the top taken out first and then the bottoms taken, because we're running right into, higher time frame manipulation candles, higher time frame structure points, and we're already in the kill zone. We're already in the kill zone where, ultimately we want to see this. We want to see this here and run on high, high, and then this high, now relative equal highs, and make a run like this. Okay, so that brings us to the current price action. So I'm going to drop back to the weekly. Does that make sense for everybody up to this point? Is everybody following along up to this point? Did I lose anybody? You have questions? If you have questions about anything I'm talking about up to this point, just feel free to stop and ask. I have both the group chats open, so. Okay, so I'm going to put that here. All right, so now let's just run the price action so that we can see the manipulation that we're referring to that took place here. Okay, so we can see price pushing down into this level, and then look. Okay, that's manipulation. Okay, so with this push down here, that's going to entice sellers. Where are sellers putting stops? Above obvious highs, the most relevant, probably most current highs, these ones here. This was an enticement or an inducement here, or induction, right? And it was making a run, and you can see we probably had some imbalance in this area. Okay, we're in the kill zone. And again, the real proof that this is manipulation is what took place after. We can see as soon as it pushed in, attacking this area of liquidity, it aggressively did a 180, ran for the highs, continued its impulsive price action, ran on these highs here, continued its move up, running on this high here. And in doing so, okay, that's where we're going to see a lot of that imbalance and primarily see on these higher time frames gaps, okay, like this, okay, gaps, and then those are just things that we can anticipate to get filled. So when we're looking at this, now we have remember what we're looking for when we're trying to identify swing points, okay? Just like this swing to this swing up here, this swing low is manipulation on a higher time frame that we can anticipate, to be respected. This here is what we refer to as a signature pattern in a logical area. The logical area being the kill zone of that monthly trading zone, the swing low to swing high, a retracement in the kill zone. That's where we saw manipulation or a buildup of liquidity, manipulation, and then a break of structure and evidence of an impulsive move and a continuation move. So then when this happens, I'll kind of bring us a little bit closer to current. Slide that over a little bit. Okay, so typically when you see big moves, they're usually, especially on a high time frame, they're usually followed by big corrections. So once we have that run, then we can start establishing new swing points, right? So we have our swing low to our swing high here. So now we're seeing corrective price action, and this can give you a couple points of interest. So what I mean by that is when you have stuff like this, of course, you're going to have selling opportunities in there. I'm not saying you have to wait 5 months for price to get down here, but you have to be aware of your surroundings so that you know when you should be phasing out, right? Like if you were selling when this broke structure, first target, these equal lows here, then maybe to rebalance this, and you'd want to be phasing out in the kill zone. So here's our swing, right? Our swing low, that is manipulation that we can then anticipate to be respected. And then our swing high, which also created relative equal highs, giving us a nice big target. Okay, so we have this target. Actually, you know what? I'm going to do all higher time frame targets like this. So we have our first target here, and we still have this high here. We didn't run on that high yet. So I'm going to put this was the high of 2018. High of 2018, equal highs here. Okay, so now what we're seeing here is a correction, right? This is what kind of price action is this? What is this price action doing here? What is the purpose of this price action now with these corrections? Yeah, rebalancing. So again, like when we're looking at price, one of the biggest things that you really want to understand is if price is making a run to rebalance, if price is making a run to create an efficient price action, and if price is making a run on liquidity. So we're not running, I mean, yes, we'll have some liquidity in this area here, but mainly this is a run to rebalance that impulsive price action. And now we have a new kill zone, a new manipulation candle, and more higher time frame targets. So I'm going to remove that kill zone, and now we're going to focus on this new current price action. So now that we have our swing low with our manipulation, and we have our swing high, which created another pretty solid target, we also have this high here, relative equal highs in this area here. I'll just mark that up. Okay. What do I want to mark up now? Instead of me just going through and showing you and telling you every bit, what do I want to mark up now? What's significant here? Yeah, our fibs, right? So we have our fibs on there, our swing low to our swing high. So let's mark up our kill zone, right? Our 71 to our 886. Okay. What else? What else? Yeah, the manipulation candle. So when I see candles like this, okay, there's a couple things that you can do. I think there was a Euro Great Britain example that I showed that was very similar to this. It's almost actually a spitting image of this. Let me show you something real quick. A lot of you might remember that this was a trade, maybe 2019. I'm not exactly 100% sure. Let me check. No, not Euro Great Britain, New Zealand. I want to show you something here. Okay. right? That almost looks like what we have here on Eurocad, right? Look at manipulation candle, and then we kind of have like a 3 candle pattern where it's 1 candle down, doji candle, and then a strong push up, and then we can see a flag pattern, a correction, rebalancing this impulsive price action. So what we're looking for on Eurocad is exactly what took place here, and exactly that took place previously on Eurocad, right? So we were looking for the kill zone. We were looking for marking up the manipulation candle like this, and we were marking up, our swing point to mark up our kill zone. And then we were looking for price to pull into this area and make a pattern. And in this case here, right when we got in there, we got a beautiful signature pattern. Some of you might remember this. This was a trade that I broke down live, and we traded this to the top. This example is the exact same thing that we're looking at with Eurocad right now. So you can see when we got in the kill zone, it had this range. Price broke out to the bottom, then attacked the top, and then you can see another flag, another corrective pattern here, right here. And you can see it came right to this manipulation candle, this 1 hour manipulation candle. And that was the last time it ever was this low. And from there, it made a run on the higher time frame target. So then you would have this target, then you would have this target, and there were other points of interest over here that we were looking for price to run to. So we were looking at setups like this is what we want to look at for trade of the month, because now we know from this point A to these highs, point B, that's going to be weeks of price action, maybe 1 week, 2 week, 3, 4, 5, 6, right? Where every week you can look to see if there's, a setup that's going to offer you a position in alignment with the big picture of buying, right? Which this did. And I'll kind of show you what I'm talking about, because this is exactly how Eurocad is setting up right now and the opportunity that is present. So look, from that point there, look, and let me just flick this on. So right now, from that point, it's that low 1, 2, 3, 4, 5, 6 weeks on the first high. Okay, then we had, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of price action, right? Of a directional bias in alignment with the big picture, with the big structure, right? And we had a signature pattern in that logical area here, this manipulation candle kill zone, right? That started it. And then every single week, right, you can look for other opportunities, right? It looks like we might have had a manipulation candle here. Price came and tested it and then pushed up. So there might be other opportunities, right, within these weeks, right? Here's another candle here. This is just daily, right? You'd obviously go lower and look at the weekly price action, but here's a daily point of interest where price pushed up and came back in, right? This week, you'd be in a point of interest in alignment with the big picture, and you look for continuation. And I had 3 positions in this move here. The bottom one I held for the entire move up to the weekly, right? And there was like a weekly point of interest where it wicked up. So you're looking at a ton of price action. So let me get that off there, right? So we can see like that was the weekly candle where we were looking for price to trade back up into, rebalancing that. So there was months and months of price action there in alignment with the big picture. And that's the exact pattern we're seeing here. Okay. So when I see these patterns here with these candles, the first thing I do on a weekly is I just mark up this one. I just combine these 2 candles here, these 2 black candles. I just take the weekly. Because I'm not too concerned about the candle here. Anybody tell me why? On higher time frames. So I'll mark that up. Weekly manipulation candle. Yeah, it's too big. I'm not looking to enter off of this candle. I'm not just looking for price to pull into this and then, press buy, right? Like, I'm looking to do the same thing that was available in Great Britain, New Zealand. So if I were to put my stop on the wick there, that's a 283 pip stop. And if, you're looking to get like maybe 5 to 1 off of that, on these highs up here, you're looking at 1,400 pips. Like, that's just crazy, right? I'm not going to hold a trade for 3 months for a 10% gain. That's just crazy, right? That Euro Great Britain, just for some hindsight here, that initial entry to the top provided like a 50-to-1 or maybe even more, just to and you can get something like that here. These are great opportunity for twin tradings, long-term holds, and it's just opportunity where you're going to have from point A to point B months or weeks of price action where you can just easily phase in and out at the start and end of each week and just keep looking for, you're going to have your weekly directional bias, and you just look for, 1 hour, 30, 15-minute setups on a weekly basis that show you bearish, bullish manipulation candles that provide, alignment with the big picture, and just, buying. So that's basically what's present here. So, we're ultimately looking for price to come down into a point of interest. When you see stuff like this too, you can also drop down to the daily and see if you can get a better candle in there. So if we drop down to a daily, we can see that there's really not a solid candle in here. But again, it's, we're using that as a point of interest. So ideally, what we want to see is price pull into this area. And then once it's here, we can start looking for patterns, right? We can start maybe looking for a buildup of liquidity and something like this. And then that would be exactly what we saw here. And obviously we wouldn't want it to run like that. We'd be looking now on lower time frames, but this was a signature pattern in that monthly kill zone. So where in this weekly kill zone, we would just be looking for a lower time frame pattern in this area that we can then use, right? We can see a buildup of liquidity here. We can see the bottom taken out in the top. Exactly what your Great Britain, New Zealand showed is exactly what we'd want to see here. Then you'd have maybe a new manipulation candle here, right? And you can maybe twin trade it. Maybe one you can hold longer if you're, comfortable holding long term, or if you're comfortable holding over the weekend, or, you can just look to get your entry, and then, towards the end of the week, or maybe if one of these highs are taken out, you can, close it up for the week, wait for the next week or so to, present new price action that also supports buying, right? Maybe, maybe you get an initial run on those highs, right? And then maybe you get something like this, right? New manipulation candle, run on lows, impulsive price action. Then the following week, now you have a new setup here with short-term highs in alignment with the big picture. And you can literally just milk these trades the entire way up every time there's a new opportunity present. And, this is getting in alignment with the short-term and long-term picture here. Does this make sense for everybody? Like this here, this is what trading is. This is how you can make trading a lot less stressful, more relaxed, and just easy, and be patient, because you know exactly the points of interest you're looking for price to come into and show continuations, show reversals, and just wait for patterns. And if you get the pattern, that's when you jump on it. And it really can be that easy. The biggest thing is just having discipline, a plan, points of interest, and just waiting for patterns. That's it. So, I mean, this Eurocad, honestly, this one might be the one that we want to just follow for the next several weeks, because when we bring it to current price action, we're in the kill zone. I mean, it's a little deeper. I mean, it looks like it actually came to this daily candle, this little doji candle. If I were to just throw that on there, right? And we can, and now it even created more short-term targets, right? Look at this here. So now we have another set of relative equal highs right in this area. So we have short-term, long-term targets. We have this high here. We most likely have some imbalance on this move here. We most likely have some imbalance in this area here. And look how many big picture targets we have. Equals, high, high, equals, big high of 2018. This is why I'm here, to make trading easy. Okay, so the new pattern, we are waiting for a pullback. Well, I mean, it can be a number of things. I mean, just like look, like when you look at the Great Britain, New Zealand, right? When you look at the Great Britain, New Zealand, this is exactly what we want to look at. You can see this one came deep into the kill zone, right? And it's the same thing. We're not just entering off of this weekly candle here or just picking a random fib, right? Because that's huge, right? If I were to take that candle here, let me get that right on there. If I were to take that candle and then this low here, that's 230 pips roughly, right? Even if I take the 886, right, that's 137 pips. That's just crazy, right? So what we're looking for is a pattern to emerge, right? And you can do it a couple ways. You can try to look for a signature pattern right at the bottom, or you can literally wait for price to start making bullish structure. And then you're just looking for patterns, but it's all manipulation candles. I'll tell you this, when I look for entries, almost never, ever am I entering a trade that isn't a manipulation candle. Honestly, I don't even remember the last time I executed an entry that wasn't a manipulation candle. I'm always getting myself behind manipulation candles for my higher time frame points of interest and the actual entries I'm executing. So when price got to that kill zone, you can see it traded slightly lower than this daily candle here. We're past the 786, so we're currently between the 886 and the 786, right? And you want to drop down to when you can actually see the price action. So on 1 hour, we can actually see the structure on that swing, right? Because a daily, that will just look like a swing high to a swing low. Now we can actually see structure, and we can see price doing what here? We can see what is happening. What is price doing here in this kill zone between the 786 and the 886? Yeah, it's accumulation. It's building liquidity. It's ranging, consolidating, whatever you want to call it, right? So that's a good sign of manipulation in this point of interest. And all you're looking for is this. Boom, then impulsive price action in the direction you want it to go. And then you play this new manipulation candle, and that's your first entry. Boom, boom. And then you're going to have multiple entries on the way up, right? If that manipulation candle is respected, now you get that continuation. Now you're going to have higher low, higher high, and possibly a break of structure on the retracement, signaling continuation. And now, right, you're just looking for new price action throughout the weeks, right? Like if I throw that week thing on here, let me delete this, right? So there's the first pattern right there. Signature pattern with a flag, boom, your manipulation candle right there. Nice flag pattern, pulling back to the manipulation candle, boom, boom. This was one I actually executed too, right? Short-term highs here, imbalance, right? Look where we're at for the end of the week, right? If you're going to be in and out throughout the week, there's your entry, there's your continuation, there's your run on that high, there's your run on the first high there. Okay, boom. Now we're in week 2, right? So now you can look for new patterns in week 2, whether it's something like this, right? Now you'd have a new swing point and a new swing high, and this swing point down here, manipulation. Now, this didn't happen. I'm just saying this is what you'd want to get behind, right? You can see relative equal lows. You can see manipulation, made an impulsive price action. Now you can get behind a new swing point, new manipulation, right? Boom, and then boom, and ride that out for the new week, right? Short-term targets in alignment with the big. Does that make sense though, for the person that asked? So I mean, it can be, a number of patterns. This one, ideally you're most likely going to see, you want to see a buildup of liquidity. You want to see a manipulation candle. Once you see the manipulation candle, like even this here, right? Like if I was in week 2, right, you can see maybe potential manipulation here running on these lows, right? There was equal lows here. If we saw any type of manipulation led by an impulsive move, that would be something that we can get behind, right? So it's attacking those lows right now. Look, those equal lows. Right? So this week here didn't offer much, right? And then you can see, okay, here is a run on, well, that looks like close to equals there. But I mean, you get the point, right? I mean, you're basically just looking for new manipulation candles, right? I mean, you kind of have one here, a run, filling that imbalance, impulsive price action, equals short-term highs here. Price came back down into this candle and then continued. So, I mean, it's just looking for new patterns on a weekly basis, or new entries. I mean, you can hold trades longer term if that's in your plan. So like when we go back to Eurocad, that's basically what we're looking for, to see if we can get some type of pattern. So daily, weekly, that's just looking like a swing point, right? Swing high to swing low. We would need to drop lower to see, if we have any patterns available. So we can do that now and see what's building up now. We can take a 4-hour, just take a look. So it definitely looks like price is starting to slow down. I'm not sure if I'm in replay mode. Is this current price action? I think this is. Yeah, so this is current price action right here. So, now it's literally a game of patience. So like for right now, we could very well start seeing a buildup of liquidity here. This could just be something like this. And if we saw something like that, you already know exactly what time it is and what you need to wait for. This and only this. A run on those lows, impulsive price action, and then boom, signature pattern. This would be your entry here, somewhere in that manipulation candle here, right? And then, you would have, short-term highs here, 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 up here. We got these first sets of equal highs. So I mean, even a move like that, right? I mean, that's obviously a manipulation candle that isn't existent, but any move in that ballpark could be, substantial gains, could be good twin trade opportunity where, one entry is something that you hold longer term. One entry is just, your standard minimum risk reward, or, some short-term highs, or whatever it might be. I also like the fractally trail based on higher time frames and stuff like this. That's what I did with the GN on 2 of my positions, meaning one's price is creating higher time frame structure, and when I'm moving fractally too, one thing you want to factor in is I'm not just doing something like this. I'm not just moving stops like this. I'm not taking my stop here and putting it to this low. Once price pulls down, makes a new high, I'm not just putting it under that low. That's retail stuff. What's the issue there? What's the issue there? 2 things. Manipulation, 1, right? These lows can easily be run on. So most cases, I'm doing it when I see new manipulation candles, right? Just like this swing to this swing, this low is manipulation. So I'm moving it with manipulation. And then let's just say I wanted to move it to, my first push up, getting price break even and in profit. What am I basing it off of with this low? Besides this low, there's something else. I'm not just dragging it right to this low. What else am I looking at? What would factor in this decision? Not the fibs. Imbalance, right? So let me just show you what I mean. Let's say we get this low here, and price starts pushing up, maybe something like that, this could easily just make a run on this low, right? Or maybe there's a little bit of imbalance right below this low, and this is going to run and take that low, fill imbalance, and then suck back up and just be a wick and then close right above here and then come up, right? So let's just say there was imbalance right under that low here. My stop loss goes under the imbalance under that low. Protect myself, knowing that that imbalance most likely can get filled here and produce a, act like a magnet and then a highly sensitive area, right? So I'm always getting my management, same thing. I'm always getting behind manipulation and paying attention to imbalance time, right? There's a number of factors that are coming into it, but you want to be aware of, the best way to do it's behind manipulation. Impulsive and corrective, yeah, that as well, right? I mean, there's some factors in there. But ideally, you just want to be aware of the imbalance too, and not just, be worried about protecting, and just moving it based on money or whatever. That you have to have some awareness. Makes sense. Never thought of it. Yeah, I mean, there's always imbalance, after these impulsive moves, right? So you just got to be aware if, a short-term high, right? Like ideally, like, you'd want to see something like this where, maybe price pushes down and pushes up and it's just making an ABC correction and runs on this low, filling like a little bit of imbalance here and then runs, right? That now here, that's where you'd want to drag your stop, because one, it's filling the imbalance and it's running on liquidity on this low. So this is manipulation candle. That's an area that if you were going to enter, would be entry on the manipulation candle, and your stop would go under that manipulation low, right? So I'm always moving my stops to, like, if there was a setup present where I'd enter it, where I'd put my stop on that setup. That's where I'm dragging my management stops to, which creates new signals. Yeah, 100%. 100%. So like right now, like looking at Eurocad, if you guys want to take this as the trade of the month, like we can. All we need to do now is just be patient. Just like that GN, when it came into, it kind of looks like the GN when it was building, when it was setting up. Let's do that here. Right, so we could very well, if you look at that and you look at that, we could definitely be getting something here. I can take this off, that off, and that off, right? It looks like it's kind of starting to slow down. We just need to see, a buildup of liquidity, see some consolidation here, a little bit of ranging, and then we can look for manipulation and, some impulsive price action in the direction that we want it to go with the big picture. And if we get that, then we're going to have a directional bias for the next several weeks, several months. And then what we can do is, when this is ready, we can keep tabs on it. When, if there's a pattern available, we can share it, we can talk about it, we can discuss entries. And then once we're actually in it, we can discuss the possibilities of twin trading. We can talk the possibility of stacking additional positions. We can talk about the possibility of, phasing in and out on a weekly bias, right? Come Friday or whatever, when short-term targets are executed or taken, right? We can look to close and then look to see the following week's price action if there are new entries. And we can just ride the opportunity every single week, if anything's present, to run on these highs here. So like point A to point B, right? I mean, this high up here, just the retracement, the impulsive continuation won't take as long as the correction, but this correction was March 2020, and this low was established, October 21. So, quite some time. So, this move up here won't be, hopefully it's not as fast as this, but even this impulsive move here, February 20 to March 20, right? I mean, that's a good solid, month of trading. We're most likely not going to get a move, that parabolic, but, this can provide, weeks and weeks of entries and opportunities in alignment with the big picture. So that's how you do it. That's how you get your directional bias. That's how you find your big picture targets. That's how you find your points of interest. And then it's just about waiting for patterns that support that big picture and getting behind it, right? I mean, selling here, it's not optimal. You're trading in a kill zone. You're trading in a higher time frame manipulation candle. Yeah, can it break through that? Absolutely. But structurally speaking, and all the confirmations of smart money, that's not something that you want to get behind. That's not going to support your trading career in the long run. This is buying opportunity. That's all we look for. We only look for buying patterns in this area. If we get it, then we can attack it. So you guys want to take Eurocad as the trade of the month, and then we can just keep tabs on it, watch to see patterns that are developing in this area, and just monitor the price action, wait till something's available, and if we get the pattern, then we can discuss the different entry opportunities or possibilities and management and stacks and all that stuff. So yeah, I'm sure Mia's behind it. This is Mia's go-to. So yeah, she's probably loving it. All right, so let's do that then. Eurocad is officially the first trade of the month. Eurocad is officially the trade of the month. So what I'll do is I'll probably do a little bit of a cleaner markup, because my markups when I'm blabbing usually aren't the cleanest. And we can post this and just keep tabs on it. But this is only going to work if we're all watching it and we're all discussing it, and possibilities and all that good stuff. So this has to be done as a team. It's not going to just be me saying, hey, here, this is the pattern. This is where we buy. This is where we phase out. This is where we add on, right? This is a learning experience. So you can identify higher time frame points of interest and targets, and how to build your lower time frame setups on a day-to-day, week-to-week basis, that are in conjunction with it. So there has to be discussion behind it. Okay, that's how you're going to learn. You're not going to learn if I'm just saying, here's your point of interest, here's your pattern, here's your manipulation candle, here's your risk to reward, and all you got to do is figure out how much risk you're putting on it, and then where you're going to exit, right? You have to work a little bit, and then that way, the goal is so that you can be self-sustaining and do this yourself. That is the big goal. So you don't have to rely on people like myself or anybody for that matter. So I'll post this, and let's see, I'll make a cleaner markup of this. We can post it and just start watching it and see what develops. Sound good? Okay. So ideally, we are looking for this. I wonder if I can write on that. Long-term target. Long-term what? Long-term idea. Does that make sense? Long-term idea. Let's make that red. Let's make that text a little bigger. And then, yeah, I'll drop this, or long-term directional bias. There we go. Long-term directional bias. All right. And I'll post that, and then we can all keep tabs on it. All right. So does anybody have any questions? We'll hang out. We're about 7 past, so we're actually like on time for this session for the first time in probably the whole year. So if anybody has any questions, now's the time. Anything that we discussed or off topic, drop them in the chat. We'll hang out for like 5 minutes, answer those questions, and then call it a day. Introducing the first trade of the month. Okay. Okay, that's posted. I'm gonna pin it. Boom. Bet yeah, 10,000. We go past 130. Bet. Bet. I'll end this right at 129. Let's see. And you can ask them in the chat too, now that I'm not sharing. Would you call that bullish or bearish? Yeah, if you drop questions, just make sure, you kind of specify exactly what you're talking about. Because I mean, I'm not sure when questions are asked. That was about an hour ago. So I'm not sure what that's referring to. If you're talking about Eurocad, we're bullish. Big picture monthly is bullish, but I'm not sure what that was referring to. Anyone know what price feed broker in TradingView comes closest to Osprey? So I personally don't match it. I just do everything based off of the TradingView FXCM that I mark things up on. I don't try to match it. That's just me. But I think Saks would be the closest to Osprey. But coming from somebody that used Osprey for years, I never once did that. However, I mark something up on TradingView and I just use the first TradingView broker that pops up, which is FXCM for most pairs. Whatever the prices were on that, that's what I marked up. Like even when Luke and I were looking at US 30 today, it was slightly off on our broker, the price. But whatever it was on when price gets to the candle on TradingView, like for example, it was in the candle on US 30 in MT4, but TradingView, it wasn't there yet. We play it off of the TradingView, what we mark up. So once it pulls in there on TradingView, that's when we hit it. But you're not going to find too many discrepancies between, the brokers with, regular Forex pairs. At the end of the day, price is price. I've never had a problem just doing everything based off of how I mark things up on TradingView. I've never once tried to align it. So, like you're going to see, right? The more you get to know me, I keep things incredibly simple. Like I just don't get involved in stuff like that. But I mean, to each their own. I mean, if you think it's going to help, I think Saks might be the closest. Do you always move your stop to imbalance? So like I also keep my management very simple too. Like I honestly, like most setups, like it all depends. Like a lot of my setups are lower time frame setups, so there's not a whole lot of trailing going on. It really depends on a lot of different factors, time of the month as well, current P&L, there's just so many factors, like, just in terms of like management first, right? Like, and this is where back testing comes in. Like, there's so many metrics that you got to pay attention to. For example, right? What do you average for risk to reward, right? My average right now, according to my collected data, is right around like 1 to 7.5. Okay. What's another key metric here? How often are you actually achieving full target? So if you're achieving full target, let's say 80% of the time, right? Maybe moving stop loss to break even at the most might be in your cards. If you average, 1 to 8 at risk to reward, and you hit your target maybe 20% of the time, what is the average, gain that you're pulling from your trades? If it's, 3-to-1 or, a certain percentage or whatever it might be, whatever metric you're using, maybe that is going to call for taking partials at that point. Maybe that's going to call for, more aggressive risk management, or excuse me, more aggressive, management with your stop and fractally trailing. Like a lot of it until like you get to a point where like you're accurately reading directional bias and, you're accurately getting behind trades that are actually running on highs and lows that you're targeting. Like there's a lot of things, like a lot of like my management in most cases with the trade setups that I take on the pairs that I trade with the setups and timeframes, a lot of it is like stop loss. Like I don't take partials often. I'll stack positions. Again, there's so many different ways too. Like I know somebody that, depending on the setup, if a setup is looking like higher risk or something looks like going against him, and he doesn't have, and he wants to make the trade risk free, but moving the stop loss to his entry won't give price enough room there. What do you think some other options are? Like, let's say somebody's running 2-to-1 and he wants to go risk free, but moving the stop loss gets price, it won't give price enough room. What is another option? What do you think another option would be? Yeah, close partials. Like you could close 2% that and then leave your stop loss alone. That way, if your stop loss actually gets hit in the initial place, it's still a risk-free trade. It's essentially making it break free. Obviously, risk to reward is not static. I try to make mine as static as possible, but that's another way of doing it, but that would affect your risk to reward. Like I know somebody that does that quite frequently. So like there's like a lot of things, and it's not like a one size fits all. Like there's so many different things, and it's all based on the person's approach, the style of trader they are, the pairs that they're trading, the times of day that they're trading, the actual setups, the execution, like, yeah, exactly. Like what fits you, right? Like, there's so many things. Like I used to do a ton of twin trading when I was swing trading. Like there's a lot of management that gets behind like, stacking positions too. And, but, do you always move your stop loss to imbalance, or do you let some run? Like it's more than, imbalance. Like there's structure factored into it too. Like ideally, if you're looking to capture bigger moves, trailing your stop loss, the best way to do that is not based on the dollar amount or how many pips are up. Ideally you want to do that on, do it fractally based on structure, but doing that, you want to make sure, that, it's an actual impulsive move, right? Like, and that's where you're going to see manipulation. That's typically what you want to put your move behind or your stop behind, because the low can just come in and be run on before it continues up. So like if I see a new higher low, but there's a little bit of imbalance right under that low, like I'm not hugging it right on that low. I'll just give it a little bit of room because of spread, because of imbalance, because price could wick below that low and then close up, maintaining structure and then go up, like, but I mean, if you're in stage 1, stage 2, the last thing that you should be worried about is management, period. That's not what you want to do. A lot of how you manage your trades is going to come from the data that you collected and back tested and reviewed, and just you need the metrics so you know how to manage. That's why like my management is very minimal, because I mean most people too, they find that they just don't interfere, period, and they just set their stop and commit to the risk and set TP. Like a lot of traders I know who are consistently profitable, the most that they do is move stops to break even. Right. And a lot of that has to do with your targets too, your average targets. If you're looking at risk to reward 5-to-1 on average, but your target's 200 pips versus somebody that's doing 5-to-1 on average, like myself, with 50 pips or less, more often than not, you don't have to mess with trailing. It's usually like a stop loss. Like, a lot of my setups don't really even involve moving to break even. They're just smaller setups, and it's just staying out of the way. I find my results are always better when I'm just not involved. And you're probably going to find that too. But you just gotta, it's just, it's not one size fits all. You just really got to look at the data and the types of setups and you know, the time frames and all that stuff. What do you know about Top Step? I don't know anything about Top Step. All I know is FTMO, and I've always said that. I've been open about it. Like if there's a reason why out of all the prop firms I picked FTMO. You know, it's the biggest one. It's the most popular one. It's got the best reputation. All these other ones that, you know, sure, there's others that are enticing, and maybe another guy wanted to offer me 400 instead of 100 for the same price, but you know, there's a reason why they're enticing people with crazy deals to compete with the other ones. But then you have stuff like that happened with that prop firm recently that just went to shit, you know. I always just go with the most reputable. In my opinion, that's FTMO. And after looking at a lot of websites for different prop firms too, I was gonna try some other ones, but it's most likely gonna just be FTMO for me. With FTMO, I don't even know why many people would want to do anything else. It's solid as they come. Their back office is solid. Their matrix is solid. The trade journal is solid. All the stats they give you solid. It's just really user friendly. They give you a ton of stats, tools. I mean, it's, you know, I'm having a good experience with it. Yes, there was one today. I got some gains behind. I'm already in the right direction for it. Yeah. That's why overnight trading shows so much when not interfering. Yeah. And I mean, if you look at that gold trade I just hit too, the TP for the FTMO, that was a trade that was set and hit while I was sleeping. Stop loss set, entry set, TP set, and nothing was ever moved. It didn't even go to break even. It was entry, target, let it ride, not interfere. I didn't look at it once. The only time I looked at it was after it hit TP and I pull out my empty phone and I just see a bigger balance. That was it. With the imbalance, do you only look to the right of the previous candle? To the left, you mean? Wait, do you only look to the right of the previous candle? Imbalance is a 3-candle pattern. It's typically a wick and then a full body, and then, you know, the wick of the 3rd candle, and in between where there was only trading offered one way. But it can be below your points of interest, above your points of interest. It can be used for entries. It can be used for targets. I'm not sure what 100% sure what it means if you look left or right on previous candles with the wicks, unless you want to show an example. But I don't see any other questions. If you want to drop a chart, Teresa, in the group with what you're talking about, I might be able to give you a better answer. Come on, don't touch me. Who you got? Is that George? Show everybody George. So this is George.
Daddy, you can't see.
He can't see.
Hold on.
Say hi, George. You having him wave to everybody? Is it time for nap? Okay.
It's time for bed.
It's time for bed?
Yep.
Okay, say good night, everyone.
Good night, everyone.
Okay, I'll see you in a few minutes, okay? I'm almost done.
Great writing.
Thank you.
No,
Okay, I'm almost done. Oh, okay. Sorry about that. It wouldn't be a set if we didn't get to Emma at the end saying goodnight before nap. I don't see any other questions, so I think we're good to go. So good session, I would think. Hopefully it was helpful. We got our trade of the month, which is good. I'm excited for this. I've been watching this point of interest for quite some time, so We just got to keep tabs on it and watch for a pattern. And now we'll have the whole community having eyes on it, tabs on it, set alerts, and we just have to wait to see what develops. And then we can go from there once a pattern emerges and start planning the trade. So right now it's just a game of patience and waiting. Dang, I owe 10K. Yeah, well, I was keeping an eye on that clock, dude. So I was making sure. I'll send you my PayPal. Or I'll take XRP too. All right. Well, good session. Hope you all enjoyed. Hope you got value from it. I don't see any other questions, so we can just call it there. Next session we got later in the week. Other than that, I think we're good. So hope you all have a good day. Enjoy the rest of the day or night, depending on where you're at. And I will see you all inside.